Hello, how's everybody doing today? So this is the very final lesson video for where we are going to finish the most important fundamentals part of this particular section before we actually move on to the charts and indicators. So how's everybody doing today? I hope you guys have had a fantastic day trading so far, and most importantly, I hope that you guys have had an amazing time during these lessons, and most importantly, I hope that you guys have taken a lot away from these so far. So far, we have covered the introduction class, which had the terminologies, which you guys should be very comfortable with now speaking to me in this particular language. In lesson number 2, we were talking about what separates superstar status from mediocre. And that had a lot to do with talking about emotions, risk management, and trading like an actual casino, right? In lesson 3, we talked about dollar cost averaging and laddering your buys. And that's the process of making sure that you don't actually purchase everything for one specific price point. As the price drops and you're very confident that it's going to get very much so near the support level, you want to ladder those buys very slowly and effectively. This way, it gives you some of the best possible average prices and you're not trapped in one specific section. And then we talked about reading level 2 order books, understanding bids and asks. The level 2 order book is simply the order book. The bids are the people that are buying, and the asks are the people that are selling. And we were talking about how momentum changes can swing very quickly based on what we're looking at in the level 2 order book. And the level 2 order book gives us the best real gauge and real momentum time swing. So now for welcome to lesson 5, guys. This is an incredibly important class that we're going to talk about. All right, so let's get into lesson 5, which will be on the topic of the dangers of leveraging, which I'm sure you guys have all seen on many exchanges before. And we're also going to be talking about shorting. And we're also going to talk about what going long means. So you guys always hear of the definitions of going long and going short. And I just want to clarify some of the definitions between them. And it's a very important psychological factor to retain, okay? You guys have to know that there are bears and there are bulls, okay? There's so many exchanges, guys, and I need to tell you right now that it's very dangerous, okay, to leverage. The last thing you want to do is leverage, okay? If especially if you are a newer trader. Remember, I've been talking many times before about how we should focus on making good trades. The last thing that we actually want to do is focus on making profit. The profit will come really, really naturally, guys. And I don't want to see you guys fall into, this pattern and become a victim of getting something called liquidated. Getting liquidated is one of the scariest things that can happen. I've been liquidated so many times before on Poloniex in my very, very, very early career, okay? And there's something called margin call, and a margin call comes up when you simply don't have enough money to pay back the exchange. So what they end up doing is they close your position, which we're all going to get into the math, okay? The math is really important behind it, and you guys need to understand the math because you need to understand the risks associated with leveraging. I really don't recommend leveraging, once again, guys, and I don't recommend it to anybody whatsoever, no matter what circumstance you're in. I do not recommend leveraging at all, okay? The only reason why I leverage on Bitfinex is because one, I'm a very experienced trader, and two, leveraging to me is honestly as normal as it is playing in the normal stock market because the math is all done in my head like that. And I don't leverage because I need to borrow money, right? Leveraging basically refers to, let's say you have $1,000, okay? And we're gonna go over the math in high detail. Trust me, this is just to give you guys a really quick breakdown. So let's say you had $1,000 to play. On some exchanges, like for example, Bitfinex or even on Poloniex, they allow you to leverage 3.3 times. So if you actually had $1,000 only to play, they will actually allow you to play 3.3 times whatever you have, say of $1,000. So 1,000 of 3.3 is $3,300. Now doesn't that seem tempting, right? Doesn't it seem really tempting to be able to play with way more money than you actually have? Yes, definitely. It does. Who does it benefit the most? Well, it actually benefits the exchange the most because you're paying more fees. All right, keep in mind, you're paying more fees, and there's literally no risk to the exchange at all. And where does the money come from? We also have to talk about all these factors as well. So let's get into leveraging and talk a lot about what it actually refers to. Okay. Now I'm just going to find like a blank screen here so I can write on here for you guys. This way, I like to write on this screen. It makes a lot more sense to write on this particular screen than to maybe go somewhere else, if you know what I mean, right? Okay, let's find ourselves a really nice blank screen here. So let's say that we're talking about leveraging, all right? Let's get into this in very high detail. So please pay attention. This is one of the most important things to remember, and the most important thing to take away from this particular video is do not leverage, guys. If you don't need to leverage, don't do it. The only reason I do it on Bitfinex is because I short the market, which is something we're going to go over in very, very high detail here, okay? What the definition of shorting, what the definition of going long actually means as well, and all the risks associated with it. And the reason why I personally leverage is because it's as plain to me and as normal to me as playing in the normal exchange market, right? So whether I could be playing, for example, $10,000 of my own money, or I could be playing $3,000, which is multiplied by 3.3, because the math is done in my head instantaneously, and I'm super familiar with all of the risk associated with it. The reason why I do it, the main number one reason is only because of this, guys, is because it actually shows my position on Bitfinex. That's right. It shows my position, my profit, and my losses on Bitfinex. Whereas if you play in your normal exchange account, you actually don't have any type of realization or profit or loss realization whatsoever. So let's get into this in really high detail, guys. I'm super excited to tell you about it, but I need to make sure that I maintain a very serious tone because I don't want you guys to get caught up in thinking, I can actually play with a lot more money because, hey, I can actually leverage. There's some exchanges like BitMEX, right? BITMEX, that lets you leverage 100 times. Okay. So if you only had $1,000, you can actually play $100,000 instead of your $1,000, right? That's multiplied by 100. But what are the risks? The risks are incredibly serious, and you guys need to make sure that you're paying attention in this video, and you need to make sure that you understand all of the risks associated with playing in a leveraged market, and especially if you're going to short as well, okay? So let's say you are going long first of all right? Let's say let's excuse me here, for example. Actually, you know what? Let me pull up my Bitfinex first, okay? Let me pull up my Bitfinex here and let me go to this page that you guys might not actually even realize exists. If you go to pretty much almost any exchange, to be honest, they anywhere that allows you to leverage, they will actually have something here called funding, okay? Now, I don't have anything personally up in the funding myself right now. Usually I do, but I disabled it for the purpose of this video, okay? So what is the funding page? Okay, let me explain it to you guys in high detail. So what the funding is, excuse me, I have to cough very quickly. I apologize. Sorry about that. So what is the funding and what is it used for? Okay, so what the funding is used for is, let's say you had a lot of capital, right? You had a very big balance, a big bank roll. What you would want to do is you would want to actually put it into the funding. Now, what do you do with the funding? It basically sits there. Think of it as compound interest. Every single day, it's actually going to gain a fixed percentage every single day. So if you were to actually fund this, so for example, if you go to the funding here, it actually gives you the percentages, right? It gives you the percentages. So what we see right now is the British pound, right? You're getting actually a really huge boost right now. And you're going to gain if you put in, for example, $10,000, you're going to gain at a compound interest rate of 0.27% a day. Right? So, that's how much you would gain. So the US dollar right now, you would actually gain 0.09% per day if you were to add your money to the funding. And the reason why they want you to do this, right, is because, well, if you play in a margin account, right, a margin account refers to an account that actually allows you to leverage. So leveraging lets you play much more than you actually have, right? And now if you play in a margin account, the exchange themselves, they actually charge you a fee per day, right? They charge you a fee per day to actually borrow money from that margin account. Well, where does this extra money come from? Think about it, guys. If there's people that's contributing to the funding, right? If they're contributing to the funding, then the people who are playing from the margin account are actually borrowing money from the funders. Does that make sense? So the exchange is actually not borrowing you money. You're borrowing it from the people that are contributing to the funder, right? Or to the funding account. So let's say I'm contributing money to the funding account and I have, say, I don't know, $100,000 in the funding account, right? I'm actually gaining, for example, if it's USD, I would be gaining 0.09% a day. So if you guys actually do the math right here, right? If I have $100,000, I'd be gaining 0.0009. I'd be gaining actually $90 a day, guys. It's actually pretty decent, right? That's right. I would be gaining $90 a day if I were to add $100,000 to the funding account. I could literally live off of this interest for the rest of my life, okay? When you think of it like that, because times 365 a year, you'd be making $32,000 a year, right? So you're getting paid. I'm getting paid, actually, we'll say, if I'm putting 100K into the funding account, right, it's gaining interest every day. And now, what does the exchange use my money for? Well, the exchange uses my money if you decide to leverage. Okay, and leveraging can come in many forms. It can come in shorting and it can also come in going long. But regardless, it goes towards a margin account. Okay, it goes towards a margin account that you're playing in. There are many different wallets. There's, for example, a normal account that you would normally play in, and then there's a margin account, and that's the account that allows you to leverage, which has a lot of risk, guys. Now, I know it's very tempting, once again, to want to play with more money than you actually have, but I assure you 100%, guys, and look at me when I say this, I assure you with 100% that you will get liquidated, okay? Getting liquidated, we're going to talk all about that, okay? Trust me, okay? So once again, I contribute to the funding account, right? And if you decide to short or play in your margin account, which basically means to leverage, to play with more money than you actually have, you are actually borrowing the money from someone like me who is adding to the funding account. So now let's talk about a lot of these definitions and where we actually stand and what they actually mean, okay? It's really important to get a very good grasp of how the margin accounts are actually used, all right? So let's get into this, guys. So you guys all know the definition of going long, right? You know the definition of going long, which I'll write on here for you. So let's just follow along here as well. This way we're all on the same page, okay? So if you're going long, for example, okay? If you're going long, for example, right? It means, it basically means to purchase low and hope to sell high, and purchase low with expectations to sell high. That's basically the simple definition of going long, right? You purchase something cheap and you expect it to sell it higher. So, giving you guys a very basic definition, which I'm sure you all know already. If you purchase, say, 100 coins at $10, right? That would be equal to $1,000 total right there. Now, if you sell your 100 coins at $11, right? That's going to equal to $11,100. So, what's your total profit? Your total profit would be 1100 minus, right, $1,000. That makes a lot of sense, which is equal to $100, right? So this is a super, super simple definition of actually going long. Now let's talk about it from the perspective of a leveraged long example, okay? Now this is going to be a little bit more complicated, so make sure that you guys are 100% paying attention to this because I assure you it's going to be mind-blowing by the time we're done, okay? So let's get into this example where I'm going to use a leverage long example. So if you purchased, okay, 100 coins at $10, that equals to $1,000, right? Just as an example right here. But if it's leveraged, right? But if it's leveraged 3.3x. So that's $1,000, okay? Now let's say you only had $300, right? You only had $300. You only have $300 of your own money, but leveraging lets you play 3.3 times more, right? So make sure that's understood. So, but if it's leverage 3.3x of the $1,000, right? So that really means $1,000 divided by 3.3x is really your money, right? That makes sense? It's really your money, just to make sure you guys understand that so far. So 300 is yours, right? So you have $300, but you're playing $1,000 and it's actually leveraged 3.3 times, right? So make sure that's really understood. So now that this means you're actually borrowing $700 from the funders, right? From the funders. So say someone like me in the margin account, right? So because you're borrowing $700, let's say now if you sold, okay, if you sold 100 coins at $11 each now, just like the above where we sold it for, right, at $11, the 100 coins here, right? That's equal to $1,100 profit, right? I'm sure we can all agree on that. So you guys have $300 of your own money, okay? And now you have borrowed $700 because your $300 is now leveraged 3.3 times. So if you sold 100 coins at $11 each now, that would actually be up $1,100 total that you now have, right? So that's the total that you have after sale. So after you sold it, you have $1,100, right? But you did borrow $700, right? That wasn't your own money. That was not your own money as well. So you have to actually still pay back $700 to the lender, right? Does that make sense so far? So now you have $1,100 minus $700 is really equal to $400 that you actually have left when you think about that. So what is your actual profit, right? Now that you have $400 left and you started with 300, well, the profit is simple, is 300, or sorry, 400 minus 300, which is equal to $100 total profit, right? Well, 400, that's actually 33% if you think about it, right? Because, well, you actually profited 1.33 times, right? So I hope that makes a lot of sense. Because you're leveraging, right? Excuse me. So if you think of the math, right? The dollar after selling 100 coins, right, at $11 each is equal to $1,100. If the profit was $100 and the investment was actually, we're going to write this down to make sure it's understood. If the profit was $100 and the original investment, we call that the principal, okay? And the principal was $1,000. That's equal to a 10% gain, right, guys? 10% gain of what you actually played, right? Makes total sense. But, guys, right? But if you take your 100 of 300, right? That's actually a 30 excuse me, 33% gain. Because if you actually take your original gain, if you take your original gain of 10% and multiply that by 3.3 times, that's 33% as well, right? So make sure that you guys really, really understand this concept. Yes, the gains can be incredibly astronomical, all right? It could be really amazing. But now we got to talk about the scenario where, let's say it actually, the market goes against you, right? If it goes against you, how much money can you actually lose? That's a really big question. So let's get into that too. Okay, let's get back into, it's actually a new day. So I wrapped up the video yesterday. That's why I'm wearing something completely different. So you guys might be wondering, why is he actually wearing something different right now? So we left off with basically learning how to long and leverage, right? But we have to understand the risks associated with it, right? We were talking earlier about how you can leverage and borrow money. So now I want to give you guys another example, okay? Let's go over another example to talk about the risks associated. So you have $300, you have $300 and want to leverage 3.3 times, right? Which is equal to $1,000 total playing, total trading money, put it that way, okay? So you have to retain or you have to maintain something called 15% equity on most exchanges. 15% equity. This needs to be very clear. So 15% of $1,000 is equal to $150, right? What this means, okay? If you were to buy, if you purchased 100 coins at $10, which is equal to $1,000 total, you can only lose 15% of that $1,000. So it cannot go below. So if each coin was $10, right, and you bought 100 coins, it means that so it cannot go below $8.50 per coin, because if you actually take, okay, if you take 100 coins at $8.50, it's equal to $850, right? Which is 15% down. Now, what happens, okay, if it actually goes down to $8.50? That would be something called your liquidation price, okay? A liquidation price is the price that the exchange will automatically close your position, right? So if it automatically closes your position, the the really horrible thing about margin trading is you're not always going to be left with 15%, guys. In fact, a lot of the times you are left with so much less than that. And the reason why you're actually left with a lot less than that is because you're catching the bottom. Okay, you're trying to catch a sell. So let's say the price actually ends up going down from $10. Now it gets to 8.50. Now a lot of people will actually be in the same position as you guys, where they also need to liquidate their position. So you can think of all of these people that are going to be in a lineup, okay, to make sure that they sell their position. Because you're in a long position, you have to sell, obviously, to close your position. But there might be a lot of people ahead of you, so you might not actually catch it at $8.50. Make sure that's understood. You might not catch it at $8.50 exactly, right? In fact, you might end up catching it at $8 instead because there's not enough liquidity in the order book for you to close your position. So if you were to sell it at $8, if you were to sell it at $8 at 100 coins, that's equal to 800, right? 800 left. But because keep in mind that you're borrowing, keep in mind that you've borrowed the other $700, right? So 700 goes back to the exchange slash funder, right? And you keep what's left. So that means that you only keep $100 left of your money. That's kind of scary when you think about it. So if you actually use bigger figures, like think about it, guys, okay? Think about this. If you're playing with, say, you're playing with $3,000 now, okay? Leverage 3.3 times, which is scary, at $10,000, right? $10,000. Yeah, so if you bought 1,000 coins at $10, right? That equals to $10,000, right? You can only lose, like you got to maintain your 15% equity, right? So if it goes down, if the coin goes down to say 850, you'll get liquidated, right? Now, ideally, if you sold it at that price, you'll have loss. So because it's at $8.50 times 1,000 coins, that's equals to 8,500. But 7,000 was borrowed, okay? That goes back to exchange, right? And then you keep what's left. So of that $3,000, you'll just have left because you're taking 8,500 minus 7,000 that goes back to exchange. You're actually only left with $1,500 left of your 3K. So you actually lost half of your money. Think of it like that. So think about like this as well, right? How would you lose half normally? Okay. If you were to lose half of your money normally, as an example, right? The coin would, if you played only $3,000, right? To lose half, the coin would have to drop to half its value, right? So from $10, it would have to drop to $5 for you to lose half of your value, right? So think of it like that. So it's actually very scary when you get liquidated, guys. And trust me, I've been liquidated so many times before in well into the past. I have never been liquidated in the past 2 years, okay? Never, because I understand the risks associated with it. I understand the math behind it as well. And this is something that you guys heavily need to understand that the risks associated with leveraging is extremely scary, guys. And I do not recommend it whatsoever to a lot of people because, guys, think about it, okay? Think about how much money you could lose and how quickly. It only needs to drop about 15% of its value for you to lose half of your money. Because you have to keep in mind that 15% of the value, whatever you're playing, is actually multiplied by a factor of 3.3, right? It's multiplied by 3.3. So 15 times 3.3, I'm just going to get a calculator out. 15 times 3.3 is about 50% of your money. So please make sure, guys, that you understand that getting rich is not about playing with more money at all. Make sure you understand that because the last thing that I want is to see you guys get liquidated and lose a lot more money than you have to, right? Please remember as well that these lessons, they don't have to come at a very expensive cost. What we try to make sure that we do is we don't focus on chasing money, okay? We focus on making good trades. And if we make good trades, then the money will come because it's going to improve us as a trader. I'm sure that, If you're a really good basketball player or a good athlete, the last thing that you want to focus on is looking at how much money that you make, right? You want to focus on making sure that you show up to practice. You want to make sure that you're a part of the team. You want to make sure that you're playing the sport the way it should be intended to be played. You want to make sure that you're becoming a good sportsman, or whatever the word is, good sportsmanship. You want to just be a good athlete all around. And then the money is simply a bonus. Do you guys think someone like Michael Jordan did it only for the money, right? I don't think he did it only for the money. Definitely not. He focused on being a very good player, and everything else was just a bonus. So, guys, make sure that you understand the concept of how risky leveraging is. I know I've emphasized it so many times already, but this is something that needs to be addressed in high detail because the risk is so scary, guys. Think about it. You're only dropping 15% in value for you to lose half of your money. That is some scary stuff, guys. And now all of a sudden, okay, if for some reason you couldn't catch it at $8.50 and you actually caught it at $8 instead, well, your $3,000 will actually turn into $1,000 just from a small little drop. In fact, usually you end up losing a lot more. Okay. Now, I want to explain to you guys the concept of something called a flash crash. Okay. I'm going to pull up a chart here. I want to pull up a chart here, for example, with a coin called Metaverse. Okay. Okay. I'm going to show you guys in detail, and you're going to know what I'm talking about in very high detail. Let's go to a 1 hour chart actually. Right here, okay? I don't know if you guys know how to read these charts yet, but do you see these long wicks, which we'll get into? This coin temporarily actually dropped, okay? It temporarily dropped to a nickel all the way from $3.39, okay? That's right, guys. It flash crashed and it literally dropped to a nickel. Okay. Now, do you guys wonder why these happen? I'm going to explain it to you guys in high detail how these flash crashes happen. It's because a lot of people are leveraging to go long. Okay. They're leveraging to go into a long position, like how you guys might be going long. Now, because the price started dropping, right? It only needs to drop 15%. That's all, 15% until everybody starts getting liquidated and the exchange, they just start automatically closing people's position. So what the exchange will do to make sure that you guys can cover, or the people who are margin trading and they're leveraging, the people who are leveraging and margin trading, the exchange has to pay back the funder, right? So let's say that I'm the one funding your margin. Like we're just using that $700 as an example, right? It needs to go back to me no matter what, okay? So because it needs to go back to me, since the exchange is clearly not going to do it, right? What they start to do is they automatically start to close people's position. But let's say there was 1,000 people that were in the same boat where they all needed to close their position. So which means they need to sell off their coin that they have. In this particular case, it's Metaverse, right? So because they have to sell off the coins, there's obviously going to be a lineup of people that need to sell it. And sometimes, guys, sometimes there's actually not enough liquidity. There's not enough coins that will accommodate all of these people, okay? So what ends up happening is there's a cascade of a waterfall called a flash crash, okay? And when this flash crash happens, right? Let's say you're in the line, you're in your number 500 of the 1,000 that's in a line waiting to sell these, right? Let's say that you couldn't sell it at the 15%, and let's say you actually ended up selling it right, at 30%, right, instead or something like that, you would have actually lost your entire bank roll. So if you're playing with, say, that $3,000, instead of because you couldn't retain that equity and you needed to sell it at whatever price to pay back the exchange, you could actually have lost every single dollar in your account. Now, in really worst case scenarios, okay, in extreme cases, because you're simply trying to catch it, right? You're trying to catch the liquidity. And you notice here, everybody's trying to sell because they're in a margin position and they're trying to liquidate their position. Sometimes you will actually go into the negative. That's right, into the negative. That's right. Hear me again when I'm telling you guys the risk, and I'm being serious about it, that you will actually go into the negative. So if you had $3,000, right? Sometimes you couldn't sell enough of them at a very decent price to stay positive. You might be selling it right here at the very, very bottom. So because you're selling it at the very bottom, you will actually go into the negative balance, meaning like minus 1,000 or minus 2,000 or even minus 3,000, whatever price you need to sell it at according to the exchange so you can pay back the lender. That is how these flash crashes happen. It's because of the cascading waterfall of people trying to basically catch the bottom, right? Catch the bottom, or they're trying to sell off their position, right? And sometimes you keep trying to catch it. It keeps going lower and lower, but there's simply not enough liquidity. So guys, the risk is real. I'm not joking at all. So if you guys ever margin trade, you need to really understand the risk, okay? You guys want to see what 100 looks like, okay? You guys want to see what 100%? Um, let's just use an example, okay? You have $100, right? You have $100 and want to leverage on BitMEX for 100x. Well, 100x times 100 is equal to, how many zeros is that? 1, 2, 3, 4. Okay, so hold on. I can't even do 100 times 100. I'm slow today. That's $10,000. Okay, I'm right. So that's $10,000 that you're playing, right? But only $100 is yours, right? So even if it dropped, how much here? Let's take a look. Times 0.01. Okay. So if it dropped 0.05%, which is half of a percent, right? So 0.05% of $10,000 is equal to 50 bucks, okay? If the coin dropped $50, you would have actually been liquidated already, okay? Simple as that, right? So if you were playing $1,000, now let's just say you were playing $1,000, right? $1,000. So now you can leverage 100 grand. Ooh, you can leverage 100 grand. Okay. If it dropped 0.5%, you would have actually lost $500 already, which means that if it dropped only half of a percent, you guys would have lost half of your money already because you still have to pay back the exchange and the funder. So guys, leveraging is it's not cool. Okay. Not cool at all. So when you guys see me leverage, keep in mind that I'm an experienced trader, and because I only do it because I can actually see the realization, the profit and the losses, right? Which actually reflects in my balance there. Whereas if you play on a normal exchange, it actually doesn't show you that at all. Not only that, I treat margin trading as normal as I treat trading on a normal exchange account because I understand all of the risks and I know the math inside out, guys. So if you don't know the math inside out, last thing you want to do, guys, is treat this as free money because I assure you, it's not free money. There will come a point where you will absolutely get leveraged. You will get liquidated, and I hear that really often. Okay, guys, I'm sorry, my eye's just a little bit itchy right now, a little bit dry. So the last thing I want to hear is you guys getting liquidated because it's bound to happen. It's inevitable. Why is it inevitable? Because if you don't understand the risk and you're chasing money and you're just simply chasing making profit instead of making good trades, then you also clearly don't have the psychological and the experience to understand that we focus on making good trades, not making profit, which also implies that you're not familiar with risk to reward ratio very well and what a stop loss is. And if you don't have the mental discipline to stick to your stop loss, then you're just going to try to ride it out when you're leveraging. And when you're trying to ride it out, you will get leverage. You will get liquidated because you don't know how to stick to your stop loss yet. Simple as that. So I'm trying to instill fear into you guys. I'm trying to make sure that my students are not going to be one of those people that's simply going to get liquidated. Because if you get liquidated, oh my goodness, you guys are going to cry. You guys are going to cry. You guys are going to say, I'll do better next time. But guess what? Maybe you already lost your entire bank roll and you may never ever be able to start up again because it's a lot of money, guys. I don't know about you guys, but I know that a lot of my normal friends, they're making anywhere between 2,000 to 4,000 to 5,000 a month of work. Are you willing to throw away your months of normal work in the stock market because of your greed to leverage? And trust me, guys, if you're not an experienced trader, you're not going to make it when it comes to leveraging. You don't leverage until you get very good at trading, and you only start very small, and it's usually for fun, right? It's definitely fun. And you guys need to understand as well that you should never, ever play what you are not willing to lose. Whatever money that you guys have online, know with 100% certainty that there's a very strong chance that you could possibly lose everything. So know that without risk, there's no possibility of reward. Don't think of crypto as something where you're just getting into it and it's going to be very easy money. Nah, it's not like that at all, guys. It's going to be very hard. It's going to be tough. You guys are going to be grinding at it to make those funds. So now that we've done leveraging and you guys understand what that means, we're now going to talk about what shorting the market actually means. All right, so let's talk about shorting the market. So first of all, we have to define what going long means, right? And we talked about that before. What going long simply refers to is buying the price at a cheap price and hoping to sell it to make a profit. And in the example that we went over, for example, if we bought Bitcoin at $6,000, just one Bitcoin, and we were selling it at $10,000, well, the profit would be $4,000 because you take $10,000 minus $6,000. Now, I want to tell you guys that there's actually a way to make money on a downtrend as well, and that method is called shorting. What shorting does is it allows you to bet against the market. Now, a lot of people simply think that shorting refers to, okay, the price is going to drop. I will sell whatever Bitcoin or coin that I have. And then when it gets cheaper, I'm going to buy it back. And I made money because it's going to go back up to that original price and I got a chance to buy cheaper. No, that does not mean that at all. Okay. We're going to go over shorting and I'm going to give you guys an example from an old video of mine for shorting. So let's go over some of the math. Okay. We're just going to go over Bitcoin shorting to bet against the market. So to bet against the market, betting it goes down, okay? And taking profit on the difference in the price. So shorting is only done through margin trading. And many exchanges actually allow you to short. Just to give you guys some examples, I think GDAX allows you to short. I know Bitfinex does. BitMEX. What else? Poloniex as well. There are many exchanges that allows you to short. If you guys want to play on Bitfinex and you're American, VPN, guys. Honestly, just get a VPN. Simple as that, right? So shorting is to bet against the market, betting that it actually goes down instead of up, and taking profit on the difference in the price. And I will give you guys a really good example, okay? Let's say that Bitcoin is at $10,000, okay? and you believe it's going to go down. So you enter a short position, okay, at $10,000, and you believe it's going to go down to $9,000, okay? So what you actually end up doing is this, okay? The process goes like this, and I will go over it in detail. The process goes like this, okay? You go through your menu. Okay, you go through your menu of whatever exchange you're going on. You guys have seen me short positions many times on Bitfinex, so you're welcome to review that as well. Every exchange has a different process. Okay, you enter your short position. You know how you would buy long at 10,000 to go long? Well, this is just kind of the opposite. So you enter your short position at $10,000. Now let's talk about behind the scenes. So what this means is you actually borrowed one Bitcoin, okay? One Bitcoin at $10,000 from the exchange to sell now. Make sense? Okay, so what you're saying is you borrowed one Bitcoin from the exchange at $10,000 to sell it now. So you're borrowing this in your margin account from someone such as myself who would contribute to the funding account there, right? So that's where a lot of the money comes from. It's not just from leveraging, it's also from shorting the market. So now that you borrowed, okay, now that you borrowed one Bitcoin from the exchange at $10,000, you owe them one Bitcoin now, okay? So let's say that BTC does go to $9,000, right? And now you buy back the one Bitcoin, okay? At $9,000, right? So now you pay back the exchange the one Bitcoin, and you actually profit the difference in price between $10,000 and $9,000. Okay, so because you're actually only working with one Bitcoin that you originally borrowed from the exchange to sell now at $10,000, they expect you to pay them back the one Bitcoin. So if it actually goes down to $9,000, then that means that you actually got to buy back your Bitcoins cheaper at $9,000, right? And then you pay back the exchange the one Bitcoin. But hey, because you originally sold it for 10K and you borrowed one, and then you bought it back at 9K, and you're giving them the one Bitcoin back, well, that's a difference of $1,000 that you actually get to keep for yourself. Okay? Does that make sense? So that's what shorting the market actually is. So if it actually went down to $8,000, then you would actually get to keep the difference between $10,000 and $8,000. But what happens if it goes up, right? Think of going long, okay? Let's say you're going long at $10,000 and you're hoping for it to go to $11,000. Well, if it goes to 11K and you're going long, you've made $1,000. But what happens if Bitcoin and when you're going long from 10K actually drops to 9K? Well, you've lost $1,000, right? So let's say you shorted at $10,000, but the price goes up to $11,000. You're like, crap, I'm going to hit my stop loss. Remember to always make sure that you stick to your stop loss, right? You don't want to lose unnecessary money. You still have to buy back that one Bitcoin to pay the exchange back, okay? But now you're buying it back at $11,000 instead of $10,000, which is $1,000 more, right? Which means you paid $1,000 more for that Bitcoin, which means you just lost $1,000. Okay, that's what it means. So if you're betting that the market is going up in a long position, but the price actually goes down, then you're out money. But if you are in a short position and you're betting that the market will go down, but it actually goes up in price, then you're actually losing money, right? So it is the exact opposite concept, okay? And I'm going to show you guys a video right now of me betting against the market. It's a little bit of an older video, but of course, I was believing that the price was going to go down. So I actually shorted EOS, and I shorted it because I thought the price was going to go down, and surely enough, it did. And then I actually bought back at a cheaper price. I paid back the exchange, the 5,000 EOS that I borrowed, right? And then I actually got to keep the difference. So check out this video that I'm just about to show you guys right now.
Hello everybody, how's it going today? It's now March the 27th, it's a Tuesday, and I'm about to make a live trade here in front of you guys. I decided to short. I literally just woke up and I decided to short EOS because of many reasons. So let's pull up some of my charts here. First of all, I see that Bitcoin is about to tank here. I noticed on the 10-minute chart, that's right, a 10-minute chart, I see this bearishly diverging right here. This is acting as a very hard resistance, if you guys notice here for Bitcoin. Right? Because Bitcoin is about to fall down a little bit right now, it's very safe to assume that EOS is also about to fall down. So I've now shorted. I'm in a $30,000 position right now. I'm already up about $200 right here. Okay, I started shorting it from right here. I'm probably the one that started to catalyze this process and dump. So yeah, so we're just about to see where it's going to go. I'm now over $100 up right here, as you guys can quickly see right here. Okay, right here, I've entered this trade at about 12:15 right now, and at 12:15, that's about 3 minutes into this trade right now. We've got a 6.05 wall that looks like it's trying to hold right here, but of course, Bitcoin is taking quite a beating right now, so it's also very safe to assume that Bitcoin is simply going to fall down. So let's take a look at what's going to be going on here. I'm just going to pull up my Bitfinex screen so we can get a hold of here. We notice that it's falling down extremely hard right now. Lots of people are selling it off to the 8K regions. We want to see if this is going to hold right here. 605 is actually being shattered right now. As we can see, it's not really holding too well. I'm just going to bring up my limit, just pretty much a little bit up there. Let's go for 0.2 right here. Let's see if this is going to hold. Right, I'm literally just right there. Tiny little wall. Let's see. Let's just keep looking at Bitcoin. It's holding at 63.32. Got a nice little wick there that I ended up rejecting it. People are buying it back up very slowly. I might not actually take my profit here. So let's actually go to about 0.5. Let's go to 8. Okay, 0.58 right here. This might be end up being a little bit more. Oh shit, a little bit too early right here. I gotta pull down my profit. No, I don't want to do that. I don't want to do that. Okay. I noticed that it's coming down here, so I will readjust right here to 603. I took about a tiny little bit of a profit right now. This still looks like it's trying to come down, as you guys can notice here. Let's go check out on a very low time frame. This is getting completely rejected at the 100 EMA, so it's very safe to assume that it's still going to come down. I'm up $245 already. Super easy trade, I believe. Super easy trade. Yep. I'm just about to get my position filled in about 20 seconds, I'm guessing. These walls of red are very encouraging to people to sell. So let's just keep taking a look to see what's going to happen. Come on. I'm not really that much. There's not really many people in front of me. Okay, Bitcoin's now going to the 8,000 range, right? We see kind of more people just selling off right here. More people are selling off. 812, it's what it's at right now. We're getting this really ugly candle that rejected at the 100 EMA. People are slowly selling off, and I'm the next guy in line right here. Okay, there we go. I'm just about to get my orders filled. Yeah, baby. And that's how you make $375. $375 in 4 minutes. GG, guys. I'm going to take this screenshot in front of you guys, and I'm going to post to people, to all the haters that think that my small gains are very crappy. Okay. GG.
So as you guys can see, shorting is not for the faint of heart, right? It is not for the inexperienced trader, because not only does it deal with leveraging, it also deals with margin account, and goes um, it also goes against the market, where you're betting against the market, right? So there's a saying, guys, never go against the trend, because the trend is your friend, right? The trend will always be your friend. So you don't want to take a lot of unnecessary risks by going against the market. But sometimes, right, when you become a more experienced trader, you might want to bet against the market because if you bet against the market, you can actually make money on the downtrend as well. So, just to summarize this lesson number 5 video, we have covered what is leveraging, what is margin trading, all the risks associated with it, what is going long, and also what is shorting as well. So we've covered all of the 5 topics. I hope you guys have had a wonderful time in this class number 5 lesson, and I hope that you guys really do understand all of the risks associated with leveraging. And guys, I need to emphasize one more time because you guys are my students and I genuinely care about you and I don't want you to get liquidated. I don't want you to get to that point. You know, in the real world, what they call it a margin call. Okay. And when you get margin called, like guys, like honestly, it makes me really upset to think about that. You know, like it makes me really upset because I think back to those days, guys, of when I was liquidated one time for $40,000. Yeah, $40,000, guys. It was a lot of it brings back like a lot of memories right now and what I actually had to go through and the emotions that I had to go through and if I feel like it's coming back right now because of how scary it was, guys. And you guys can see it on my face right now how scary it was to lose that kind of money of $40,000 getting liquidated. And guys, I didn't keep any of it. It went to zero. Yeah, it went to zero. And the last thing that I want to see is for you guys to get liquidated because it is the scariest thing that can happen. When you get margin called, it refers to having to sell basically whatever you have left just to make up for that having to pay back the funder in the exchange in this particular case. And when you get margin called and you actually have to liquidate your position, guys, it's the scariest thing ever. Don't do it. Don't leverage. Don't short. Like don't do any of those things until you get much more experience in the market because I want to see you guys succeed. Okay? And the risk needs to be drilled into your head. I need you guys to understand that, okay? And I want you guys to be happy. I want you guys to succeed. I want you to be thrilled with playing the market. But I don't want you to take these unnecessary risks and focus on making money because the focus should be on what, guys? It should be on making good trades if you said that. So, guys, thank you very much for joining me for this lesson 5. It was a wonderful time talking about leveraging, talking about the risk associated with it, talking about liquidation, talking about margin, talking about going long, talking about going short. And if you have any questions, guys, make sure you are 100% posting it in the below. There's a question and answer section, guys, and because you're my students, I will be very inclined in the next 12 hours to make sure that your answers are thoroughly answered, okay? I'm not going to leave you guys hanging. You guys have me. I'm your instructor. You guys have paid for the course. I'm very grateful for the support. Make sure you're asking as many questions as you can because I want you to learn. And that's what I'm here for, to answer the questions that you guys have. So thank you very much for joining me. I apologize for getting a little upset there when I was talking about losing the 40K. I only got upset because the last thing that I want to see are my students make the same mistake. I don't want you guys to make the same mistakes that I've made. I've made them all already. And these lessons and these advice that I'm giving you is so you don't have to repeat the same mistakes that I've made. Let me make them for us already, which I've done. So have yourselves a great day. And thank you so much from the bottom of my heart for all of your love and your support and for especially joining me on this lesson 5. I'll see you guys in lesson number 6, and that's where the goodies begin. Okay, guys, take care now. Bye.